Welcome to another edition of Commodities Corner with me, Alex Izat. West Texas Intermediate fell for the second week amid speculation that US oil demand is slowing after a government report showed weekly crude inventories expanded for the first time since June. Joining us to discuss oil is Jasper, market analyst at CMC Markets. Jasper, WTI prices are down 0.47%, 1% less than this time last year, and this is despite geopolitical tensions. Can you explain why this might be?
Well, geopolitics have put some upward pressure on prices, but you have to consider the other factors as well, namely just the supply and demand. There has been weak global growth this year. China are saying they're at 7.5%, but you can't really necessarily trust those numbers. The USA on aggregate between the two quarters is looking about 1%. UK is strong, but arguably too based on the housing market. In the EU, there's almost no growth. But on the supply side, there's plentiful oil. There's a shale oil boom in America, and that's potentially going to happen in other places around the world. So when you get that lower demand and higher supply, it just means prices are going to drop.
Tensions in Russia and Iraq are continuing to rumble on. Do you think geopolitics can still influence oil prices?
If you look at the prices from the start of the year, the prices did move steadily higher as the geopolitics started escalating. There were fears that these tensions would lead to a disruption in production of oil in the Middle East, in Africa, and in Russia after that, but it didn't happen, and so it didn't follow through. So should some of those type of situations happen again, either in some of these areas where there's a differing conflict or differing problem, or some of these tensions start to escalate in ways that could actually impact production, then you could certainly see a turnaround. That's always a risk.
What is your outlook for WTI oil futures? We are just coming out of a peak US driving season. Will that have an effect on supply and demand?
Well, the 1 month outlook, I'm looking at about $99 per barrel on WTI. So that really kind of goes a little bit counter to the seasonal effect in the short term, because I think we are just a bit technically oversold. We've just gone down so far, and we've hit a few levels that have been important in the past. But I think over the 3 months, we're actually going to move down towards $92 per barrel. And so that is going to be somewhat based on these seasonal factors, the driving season you mentioned in the US, as well as perhaps lowered geopolitical tensions. But over the 6 month period, I'm seeing where these fundamental supply-demand factors come in and move down to around the sort of $86 per barrel mark.
Thank you for your time today, Jasper. We'll be back on Thursday with another Commodities Corner, but until then, keep checking the Dukascopy TV site for up-to-date news. Goodbye.